Everyone, I welcome you to XBRL Weekly News from NeoClarus, and this is edition number 6. Let me introduce myself. My name is Somnath Ray. I've been working in the XBRL field for the last 5 years. I'm also a CPA with a diploma in IFRS. And so in this edition, I'm going to continue with navigating the IFRS taxonomy series in preparation of SEC filings for the foreign private issuers. And this is going to be part 4, which is going to talk about IFRS 4 insurance contract standard, and I'm also going to talk about the data quality issues as detected by XBRL US as of today, that is October 2nd 2014. So we are looking at the definition of insurance contract, and we are also looking at the extended link of the IFRS taxonomy for IFRS 4 insurance contract standard, so which is 836500, which we are going to have a look very soon. So the insurance contract definition has 3 important components: the insurer, the policyholder, and the insured event. So an insured contract, an insurance contract, is a contract under which the insurer accepts significant insurance risk from the policyholder by agreeing to compensate the policyholder if a specified uncertain future event, the insured event, adversely affects the policyholder. So briefly we can say that the insurance contract is a risk mitigation strategy of the policyholder to protect itself from the negative financial impact of the occurrence of an undesirable event which may happen in the future. And these are some of the examples of insurance contract: insurance against theft or damage to property, insurance swaps and other contracts that require a payment based on changes in climatic, geological or other physical variables that are specific to a party to the contract, insurance against product liability, professional liability, civil liability or legal expenses, life insurance, surety bonds, fidelity bonds, performance bonds and bid bonds, credit insurance that provides for specified payments to be made to reimburse the holder for a loss it incurs because a specified debtor fails to make payment when due, product warranties other than those issued directly by a manufacturer, dealer or retailer, title insurance, travel assistance, catastrophe bonds that provide for reduced payments for principal, interest or both if a specified event adversely affects the issuer of the bond. And this is the objective of IFRS 4 standard on insurance contract. So the main objective is to specify the financial reporting for insurance contracts by any entity that issues such contracts, and to provide the required disclosures that identify and explain the amounts in an insurer's financial statements arising from insurer's contracts, and helps users of those financial statements understand the amount, timing and uncertainty of future cash flows from insurance contracts. So this one gives the scope of the insurance contract standard, which includes insurance contracts, including reinsurance contracts that an entity issues and reinsurance contracts that it holds, financial instruments that an entity issues with a discretionary participation feature. And these are the scope limitations of insurance contracts, which are product warranties issued directly by a manufacturer, dealer or retailer, employers' assets and liabilities under employee benefit plans, obligations reported by defined benefit retirement plans, contractual rights or contractual obligations that are contingent on the future use of or right to use a non-financial item, for example some license fees, royalties, contingent lease payments and similar items, as well as a lessee's residual value guarantee embedded in a financial lease, financial guarantee contracts unless the issuer has previously asserted explicitly that it regards such contracts as insurance contracts and has used accounting applicable to insurance contracts, contingent consideration payable or receivable in a business combination, direct insurance contracts that the entity holds, for example direct insurance contracts in which the entity is the policyholder. So these are some of the scope limitations for the insurance contract standard, that is IFRS 4. So now we are looking at a very important concept, which is the liability adequacy test, which needs to be performed by the insurer at the end of each reporting period to find out whether its recognized insurance liabilities are adequate or not, and it has to perform such liability adequacy test with the help of current estimates of future cash flows under its insurance contracts. So this is the mechanics of the test, of the liability adequacy test. So the estimated future cash flows is compared with the carrying amount of its insurance liabilities less related deferred acquisition costs and related intangible assets, and if there is a deficiency, it shall be recognized in profit or loss. So that's all about liability adequacy test, which requires to be performed by the insurer at the end of each reporting period to find out whether its recognized insurance liabilities are adequate or not. So this slide actually talks about the restrictions for the changes in accounting policies with regard to IFRS 4 insurance contract standard, and it says that an insurer may change its accounting policies for insurance contracts if and only if the change makes the financial statements more relevant to the economic decision-making needs of the users. And these are the disclosures, some of the important disclosures with regard to IFRS 4 insurance contracts, accounting policies for insurance contracts and related assets, liabilities, income and expense, the recognized assets, liabilities, income and expense arising from insurance contracts. If the insurer is a cedent, it shall disclose gains and losses recognized in profit or loss on buying reinsurance. And if the cedent defers and amortizes gains and losses arising on buying reinsurance, the amortization for the period and the amounts remaining unamortized at the beginning and end of the period, the process used to determine the assumptions that have the greatest effect on the measurement of the recognized amounts described in B, which talks about the recognized assets, liabilities, income and expense arising from insurance contracts. When practicable, an insurer shall also give quantified disclosure of those assumptions. The effect of changes in assumptions used to measure insurance assets and insurance liabilities, showing separately the effect of each change that has a material effect on the financial statements, reconciliation of changes in insurance liabilities, reinsurance assets and related deferred acquisition costs. And then we have like if an insurer is required to disclose information that enables user of his financial statements to evaluate the nature and extent of risks arising from insurance contracts with regard to its objectives, policies and processes for managing risks, information about insurance risk, information about credit risk, liquidity risk and market risk, information about exposures to market risk arising from embedded derivatives. So let us now have a look at the IFRS taxonomy, and we are looking at 836500 notes, which deals with insurance contracts. So we are looking at description of accounting policies for insurance contracts and related assets, liabilities, income and expense text block. We see assets arising from insurance contracts. Then we see total liabilities under insurance contracts and reinsurance contracts issued, income arising from insurance contracts, expense arising from insurance contracts. Then these are some of the important elements. As we scroll down, we see some reconciliations. We see reconciliation of changes in liabilities under insurance contracts and reinsurance contracts issued. So we find the opening balance over here. Liabilities under insurance contracts and reinsurance contracts issued at the beginning of the period, and liabilities under insurance contracts and reinsurance contracts issued at the end of the period. So these are the reasons for the changes in these two balances, that is beginning and closing balances. And then we find reconciliation of changes in deferred acquisition costs arising from insurance contracts. So this is the opening balance, like the deferred acquisition costs arising from insurance contracts at beginning of the period, and deferred acquisition costs arising from insurance contracts at the end of the period, and these are the reasons for the changes in these two balances. And then we find reconciliation of changes in reinsurance assets. So this is the opening balance, reinsurance assets at beginning of the period, reinsurance assets at the end of the period, and these are the reasons for the changes in these two balances. And then we find disclosure of nature and extent of risks arising from insurance contracts, and these are all the elements. So this is pretty much the IFRS taxonomy, which deals with IFRS 4 insurance contracts. So let us move on to the next topic, which deals with XBRL data quality issues as detected by XBRL US as of today. So we are looking at the SAP Lumira Visual Intelligence tool, and we will be looking at the numbers as of today, that is October 2nd 2014. So let me drag and drop one of these charts. Let me expand this. So we find that the invalid access member combination, which is affecting the comparability of XBRL data, stands at 1.25 million as of today. And then we see negative value reported for a concept that is expected to have a positive value, stands at 588,993 as of today. This is affecting the financial semantics and the accuracy of XBRL data. And then we find then we find incorrect date, which stands at 483,802, which is affecting the accuracy of XBRL data. And then we find required value that is not reported, which stands at 456,609, which is affecting the completeness of XBRL data. So let us look at these numbers from another graph, which is the bar graph. And let me do some formatting over here. Let me make the data labels of a different color, blue. And let us expand this. So we have calculation error, which stands at 4911, which is affecting the financial semantics and the accuracy of financial data and of the XBRL data. And then we have changes in base taxonomy effect element usage. So this is affecting the comparability of XBRL data, which stands at 119,907. And then we have incorrect calculation weight used, which stands at 59,537, which actually is affecting the accuracy of XBRL data and the financial semantics. And then we have missing calculation, which stands at 7486, which is affecting the financial semantics and the accuracy of XBRL data. And then we have positive value reported for a concept that is expected to have a negative value, which stands at 37,372, which is affecting the accuracy of XBRL data. And then we have value reported for a concept appears unreasonably large or small, which stands at 179,548, which is affecting the accuracy of XBRL data. So let us look at the growth in these errors over a period of time. That is just over 1 month. So that's from August 25th until today. So let us expand this. So we have invalid access member combination growth is 17,690 within a period of 1 month, or just over a period of a month. And then we have duplicate extension concepts, and the growth is 17,545. So this is a case when extensions are being created in spite of there being corresponding XBRL US standard tags, and then so the growth for this is 17,545. and then we have incorrect date, the growth is 9553, and then negative value reported for a concept that is expected to have a positive value, the growth is 6166. So that's a huge number within a period of 1 month. And then we have required value that is not reported, so the growth is 4560. So these are some of the significant growth rates in the XBRL errors or inconsistencies. So let us move over and let us talk about NeoClarus a little bit. So NeoClarus has been providing XBRL conversion services to over 200 clients through our internally developed XBRL cloud-based solution, and our charges are very reasonable. Say for example, the annual XBRL conversion services for a non-accelerated filer is just $2,975, and there are two reasons for this. So the reason number one is that we have a highly advanced cloud-based XBRL solution which helps us to reduce our costs, and the other major important reason is that we are exclusively focused in providing XBRL services, and we do not have any other lines of business, and that is the reason the overhead expenditures are very low, and thus we are able to provide or pass on the low costs or the benefits of low expenditures to our clients in the form of very affordable and reasonable fees. So we also provide risk-free XBRL compliance. The NeoClarus XBRL software ensures completeness, comparability and accuracy of XBRL interactive data by performing all aspects of XBRL validations, and we adopt the recommended best practices of interactive data modeling. And this is possible because we have a highly dedicated team of technology professionals and accountants, licensed CPAs and IFRS certified accountants, who are highly experienced in interactive data modeling. And we in this section we find some information about our cloud-based XBRL platform. So we have a cloud-based XBRL solution which provides timely and accurate update of the status of XBRL document preparation by automated emails. We also provide inline commenting feature which actually facilitates a quick resolution of all issues, and we have a centralized repository of discussions and secure file transfers which provide a speedy filing and an easy audit trail. So those are some of the benefits for filing with us. So this is a brief summary of all the advantages for filing with us. And so basically we are a technology company which is exclusively focused in disclosure management solutions, XBRL audit and data services, and we have professionals from the technology field. We have licensed accountants like licensed CPAs and IFRS certified accountants who are experienced in interactive data modeling with the US GAAP and IFRS taxonomy. So these are the three services which we have: XBRL disclosure services, XBRL audit services, and XBRL data services. So for XBRL disclosure services we have the NeoClarus iFile solution, which is a web-based, collaborative, easy to use solution and which is password protected. And we have NeoClarus I audit solution, which actually performs all the validations as per XBRL, as per the SEC XBRL rules. And we have the iPurser solution for our data services. So this is all about us, and thank you for watching the video. If you have any questions with regard to sales and support, you can give us a call at 408-340-7802, 408-340-7802, and you can connect with Mr. Alan Wall, who is the VP of Sales, and you can also reach him at sales@neoclarus.com. You can also reach me at somnath@neoclarus.com. So thank you very much for watching this video, and see you soon.